Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's market analysis. Should be an interesting week. There's a lot of stuff going on. News is, I wouldn't say, the major forefront of what's happening this week. Some weeks it's action-packed with news, right? I wouldn't say that this is one of those weeks, but it is a good week as far as what the new normal is going to be. And by that, I mean, we're seeing a lot of appointments being put into the cabinet. We saw Yellen get approved today, or I guess late last night. So again, now it's kind of like, what does this first gear look like? And again, because of it, there's some interesting things that we can be trading out of it. So, whoops, that's clicking buttons and stuff is popping up all over the place. Sorry about that. So let's just dive right into things. I can't believe it's already January 26th. It's amazing that I just feel like this month is flying by, for lack of a better word. But yeah, next week is, I was looking at it, it's February 2nd next week. It's like, wow, where did January go? Like I feel like we were just talking about 2020, rolling into 2021, and now it's like, yep, hey, first month is gone. Let's go, let's roll. So yeah, it is what it is. Anyway, for those of you that don't know who I am, I'm the president and CEO of Keep Trading Simple, and I really focus on things that not all traders look at, right? I focus on price action. I focus on things keeping it simple. I focus on not so much indicators, but price action, where buyers and sellers have been. You're not going to see a lot of fancy charts in this session. If you're looking for that, I apologize. Or actually, I don't apologize. But I don't use 8 million indicators to try to get that secret sauce. I'm really about reading a chart, and that's about it. I've been trading since about 2000, so I've seen kind of the up, left, right, sideways, pretty much as many I would say as many things, but obviously now we're in a pandemic. I can say that I've seen a tech bubble, I've seen a housing bubble, I've seen a pandemic now, I've seen the market go, cut itself in half twice. Crazy stuff happening in the market. So again, seen a lot of different things, been a financial advisor, been on the inside for one of the big three advisory banks, got to learn about bonds and their relationship to, basically the trading realm. Worked on Wall Street. Literally, I would walk past the New York Stock Exchange. I wasn't on the stock exchange. I was actually right down the street from it. I used to walk past it every morning for about 2 to 3 years. So again, been out there, seen a lot of things. Again, I'm here to share my experience with you guys, and hopefully you can get some type of a golden nugget out of today, something whether you didn't know, or a new way of looking at things, or maybe even the confidence to try something that you've always wanted to do that you've never, been able to, get the guts to get up and do. With that said, before we begin, let me make sure we cover our Nadex risk disclaimer today. Just be aware that trading on Nadex involves risk that may not be appropriate for everyone. Members risk losing the cost of end of their transaction, including the fees. You should consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material included herein is to be construed as a solicitation, recommendation, or buy or sell offer for any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so here is what our agenda is going to be for today. I obviously talk fast. I'll try to slow down. I get pretty passionate and excited about this stuff. What we're going to do is talk about the upcoming news events. If any of you were on our broadcast that we do every day at 9 a.m. on the Nadex YouTube channel, we kind of pick out the hot topics of the day. And I mentioned that really this morning for news, the pound was the pair to play. It was up 106 pips in 6 hours. It moves 55 pips in an hour and a half. Again, news events are a big part of my trading, and hopefully you guys will incorporate it into yours as well, because especially with Nadex, there's just so much opportunity based around news. Then what we'll do is we'll dive into the indices. Right now, for me, the indices are kind of funky to play. With everything going on, it's kind of it's like boom or bust right now with indices. And again, we'll talk about where they are, where the levels are, and where some potential trade setups are. We'll dive into the Forex realm. And earlier today, Forex was completely flat. We're getting a little bit of movement, but not as much as I would traditionally like. We'll talk about where some of the bigger levels are. The pound actually just ran into a level just a little while ago that we've been talking about it for, I don't know, a week and a half, 2 weeks. So it's finally good that we got up there. And again, there's some opportunity coming off of it. And then commodities, commodities being gold, silver, and then oil. There was a position of short. I was looking for oil to kind of come down into that 52.50 range after a top early morning today, and it did. It finally hit it, and I guess it's even lower, like 52.40ish right now, it looks like. So We'll talk about what's next for commodities. Again, we have the oil inventory report tomorrow. I saw kind of a news release come across, or a headline come across, actually my daughter's tablet, a little while ago, and I don't know if that was last night because obviously she wasn't on it, about Biden putting in another law about, or another executive order, and again, we'll see if we can find that, in regards to oil exploration. I don't know. I feel like at this point, I feel like the government's trying to get us to go full electric in 4 years, and it just doesn't work that way. And yeah, we'll see. I don't know, but we'll go ahead and check the oil chart out, and we'll see what's rolling with oil, because again, oil inventory is always a big one. Um, they make cars that last these days; they don't die. And when a car lasts 15, 20 years and it uses gasoline, we're going to need gasoline for a while. So we'll see what kind of plays and what kind of deals we got coming on that side. With that said, let's go right across. Let me pull up. Let's see, where is it? Right there. Let's go right into where the news is and where it currently are. So, as I mentioned, again, I use this gauge up here, this pip change in 24 hours. You can see there's not really a whole lot going on here. The pound dollar is up 60, and again, most of that has come from the European Open, and it's actually starting to pull back a bit now. Reason why was the really good. I mean, I can't say really good. All three news releases for the pound at 2 a.m. this morning beat forecast to the good side. Now, is having your unemployment rate go higher good? No, but they really had expected it to be much worse than it actually was. That's good. And then again, the average earnings being up. So it's a great day for the pound. And any news that is positive, again, for the pound, it should give us that type of pop this week. And if you guys don't know how to do that, again, you can use this. You can use daily effects. They all have filters. In this case, you can click the filter here. And if you want to look for the week, you can always do one of these none, pound, and then click it in and see when all the pound data is for the week. And again, you can see we don't have a lot really for the rest of the week as far as the pound is concerned. Today was the big day. There we go. But for the most part, all the news is really, I would say, for the day as far as the U.S. trading session. We're pretty much done for the U.S. trading session. Tonight at 7:30 p.m., I'm actually very much looking forward to this Aussie release. The reason why I am is because CPI, Consumer Price Index, is really our first gauge of inflation. Obviously, with talks of stimulus and quantitative easing and really trying to power through this pandemic on an economic basis, there's a lot of money being printed. And again, inflation and gold is the first two things that people are really kind of focusing on. Thus far, we haven't really seen inflation creep its head yet, and it's why gold really hasn't had kind of the boom that everybody expected. I mean, there was people claiming back in August gold, silver by year end would be at 50, and we're not even remotely close to that. But again, we haven't seen it, and there's a lot of headlines out there about how this pandemic is going to take a lot longer than people, I think, originally thought, kind of come through the other side. So, we're seeing a little bit of a positive uptick in inflation. It's on a quarterly basis. So again, if you think a quarter back, it's like, yeah, we were in kind of the heart of wave number 2. But at least for Australia, it's going to be an important number and definitely could lead to some movement both in the Aussie dollar as well as the Aussie yen tonight. Two forex pairs that you can trade inside of Nadex. Wednesday, you can see Wednesday is kind of chock full of news right for the U.S. Again, early morning, we have some German data. We have these core durable goods. And traditionally, durable goods and core durable goods tend to be pretty good news trading events, right? And again, at 8:30, this could really set us off for the open tomorrow and provide us with some opening movement for not only the indices, but also anything that is dollar-based. Then we kick in at crude oil at 10:30 tomorrow. Now, crude oil had a lot of movement. If you guys remember last week, we had it on Friday, and we had so much movement in the European hours, and then really from the opening until oil, it was kind of over by the time we finally got it. But this week being back on Wednesday, it's still showing us having a surplus here. So could be interesting for oil. And again, I'll show you what the setup was this morning and what we can do with it. And then we have the FOMC statement. And again, FOMC can always be some big bang. They're not expected to change the federal, funds rate. I don't think that there's any reason to do that. We're not in a situation. Put it this way. I don't think they're going to go lower in the Fed fund rate. I don't think there's any reason to. Again, we don't have sinkholes in the White House yet. We're not quite there, right? Are they at the situation where they're going to raise it? No. Okay. So again, there's slim to zero and 0.0000 chance that they're going to raise rates. It's pretty much, I think, about across the board, the consensus is that they're going to hold. And again, when you raise interest rates, it hurts Wall Street. It hurts businesses. Lending gets more expensive. With everything that this administration, the new administration, is talking about, particularly the tax increases and the tax raises, raising taxes and raising the Fed funds rate would be a horrible recipe for the economy. And all they're talking about is how bad it is. All right. So again, the chances of that are slim to none. I think at this point, it's more kind of the language about when they could potentially be raising. I think the last we heard was 2023 was when they think that we could have a potential raise in. That's not necessarily the best statistic or the best forecast. You're like, wait a second. So we're going to go through, and this was like December, I think they came out with that one, that statement. It's like, hey, we're not going to raise interest rates for 2 years. What? 2 years? Really? It's going to be that bad? And I don't think people are prepared for that type of recession. So, FOMC tomorrow could provide some interesting movement. It actually may be stagnant tomorrow until the FOMC statement. And then, again, indices could definitely move kind of crazy, right? And again, this is Powell side, and then we have Yellen side. So it's kind of, we got two people kind of working on this one now. I'll see tomorrow night, and there's really nothing else over there. Thursday, we have the advanced GDP feature. And again, this is kind of bringing us back. You see this 33.4, and I'm one of those people that I am definitely a fair balance type guy. You see a 33.4%. It's like, oh my God, is the economy great? Well, no, not really, because before that it was down 33%. And if you lose 33 and then gain 33, it doesn't bring you back up to the same exact place that you were. So, having a 4.2%, that's not necessarily bad. This is kind of, President Trump's last official reading, right? Because it's a quarter-over-quarter basis, and it's basically ending right now. So now from now on, it will be kind of what Biden does as far as the GDP. But this is Trump's final kind of, his kind of final reading. Unemployment claims obviously going to be pretty important. Again, this is a number that is kind of a strange number, right? It's been big. We'll see what that one comes in at, and we'll see. That's going to kind of dictate, I think, between GDP and unemployment claims, and actually continuing claims as well. I think this is going to craft our Thursday morning. Leading index, new home sales, I'm not concerned about that. Natural gas, maybe, but I think a lot of the focus is going to be on where the GDP currently is. And again, where we are with the pandemic right now, I don't think the GDP number is as important as unemployment claims and continuing claims are. Because again, people not working, that's kind of really what matters. Again, who cares what the GDP is now? I mean, are we through the pandemic? Are we still going to be affected by the pandemic? Absolutely, right? Absolutely, right? We have new variations, new strains. Moderna said yesterday they got to create a booster because the South African variant is, the Moderna's vaccine is not as efficient. It still works, but just not as good as it did with the other strains. That's just this mutation. God knows what the next mutation is going to look like, and it will mutate. It's a virus, right? So again, the GDP feature, I'm not necessarily as worried about, but it will provide some, talking heads. And then we go into Friday. All right, Friday, a lot of early morning European data, and we see GDP, but on the European side, we're seeing the French data, we're seeing German data, we're seeing Spanish data. Again, the ECB just came out with about we're at that 1.9 figure. They were at the 2 figure, right? So they have actually a bigger package than what we have. It'd be interesting because you look at some of these GDP numbers, right? You're seeing -4. You're seeing, where is it? The Spanish one, minus, the flash GDP is -0.4, right? So you're not necessarily seeing, again, this is coming in flat for Germany. So not necessarily seeing the best, and then we roll right into CAD data. And CAD has had good data lately. Okay, so this 0.4 actually could come in at a 0.6 and drop that dollar CAD even more. So that could be interesting. The personal spending, it's all right. I'm not necessarily as concerned about any of these. The consumer sentiment figure, maybe something that we look at. But for the most part, I think CAD and the early morning European data is where a lot of the swings will come from. And then we may get some, there may be some PMI in here. We may see something. But for the most part, I think a lot of this is going to be early morning trading. And when I say early morning, the European session could be a rock star session on Friday. But of the entire week, I would say the one I guess really the two that I'm probably most excited about this week are, number one would definitely be this Aussie data tonight. I would definitely watch that. And then really kind of Friday morning, seeing all this data, expecting it to be so negative, I think, we could end the week on maybe a short euro trade or maybe even like a euro pound short. Because again, There's not really any pound data, right? You guys ever heard the saying, no news is good news? Well, guess what? You know, when everything in the world is bad, if you're the one person that doesn't say anything, that tends to make it seem like you're a bit stronger. And if we have all this European data that's already picked to be negative, it could be an interesting morning to trade the euro pound, right? All right, so let's dive across. That's kind of the week in review, or week in view, not review, in view. So the NQ. NQ got absolutely hammered yesterday with kind of this big push to the downside. It was pretty quick, it was sharp, and then it kind of rallied back up. And again, this is kind of the definition of those parabolic moves. Very, very strong move that happens in again, this really happened in 1 hour, and then we tend to see things retrace. And that's just trading. That happens all the time. And again, I'm sure you guys are very, very familiar with what happened with all this and, just all the craziness that happened yesterday with bailouts and that kind of stuff. Today we're coming back to normal. I haven't seen any crazy headlines. So the NQ for me right now, and again, you're seeing it rally back up and we have some buyers in. The NQ is in a position where it can actually benefit from a couple different things. All right. NQ can benefit from further lockdowns because, again, any type of reliance upon technology will always help the NQ. Okay. If we get stimulus and people have money to spend, right, disposable income, they also tend to spend it on tech. So the NQ is in a situation where I would actually be looking for any type of positive news, or if we can get a push through this level. And again, remember my levels on this are approximate, but anything, and they're approximate because it's ECN-based data. It's, the numbers are going to be slightly off. But again, using that prior high, any type of break above 13,558 or 559, I would be looking for one of those Harry Potter trades, a continuation pattern to the top side. Again, what we're looking for in those is we're looking for a drive through, a base, and then a pullback, not just a pop through. A pop through is nothing but a trap, right? It's a support and resistance trap. But if we get a pop through, a base, and then a pullback, that is our trigger to go long. And I do feel like right now, trying to pick a top on this one, again, there was a small short that you guys could have grabbed in here today, and it was a decent move. But again, trying to pick the top in something that is going to be this volatile with any type of news, and again, $1.9 trillion, people are going to get checks for XYZ. Those are the type of things that have the ability to drive this higher. And again, as long as we'll continue to have a very weak economy focus, high stimulus focus, low lending cost environment, this should continue to push higher. All right. So again, not saying that this won't be kind of where it rolls over. Downwise, because we had this big spike, there's really not a whole lot of clean at this point. The last basing we really had is probably down here at this point. This level got burst through with the news from yesterday, but probably, right now, if we start to kind of turn and roll back down, there'll be a little hiccup over here at about 13,400. We will see a little bit of a hiccup, most likely down here around the 13,125. All right. Right now, really kind of what my focus is I'm looking for a clean break and another all-time high. I just think with everything going on right now, supposedly as bad as we are, besides the tax increases, there's not really a whole lot out here that really can stop this right now. Coronavirus is bad, but the numbers are looking better in the United States. So again, this one I think has the potential to go higher. Again, play this on a pullback. Don't get in, don't buy it its first spike through. Wait for a pullback and then wait to go long in the NQ. S&P. So the S&P, this is exactly what I'm talking about. We had a break above this 38.64, but what did I say? I wanted to go up, I wanted to base, and I wanted to pull back. And all this did was literally punch up and punch straight back down again. It never gave us any type of a base. If it punches up without the base, that's where the traps are. And here's the proof, guys. Literally, everybody that's like, oh, all-time high, buy it. It pulled back on them right away. And it's the difference between creating a base and creating a trap. So this was a trap right now. And levels that I would look for in this one, I would say this is a decent level of basing. It kind of came in, it dropped it base sideways, it pulled up, it tested again. And on a lower time frame, if you go down to a 15, you'd be able to see it a little bit more. Yeah, you can kind of see the formation there. It's not as easy to see, though. So we'll use a 30. But I probably think this is a decent level on the downside. Now, end of day rallies have been something that we've seen, pretty frequently. That as we go into the end of day, we have a last kind of surge. It doesn't necessarily mean an all-time high, but it means that we're getting some type of a surge. This is definitely a level that I would say that is probably it's pretty decent as far as a good place. If we kind of grind sideways, go a little bit lower, and then maybe like 330, look for some type of a bounce. If it's just flat here, then it's just a kind of a crapshoot at that point. But right now, I'd say, kind of the same thinking. Unfortunately, I don't necessarily have the best. Let me see, is it over here? I guess you could use this. Um, you could use this level as your level of risk for a punch higher, which is approximately 38.69 to 38.64. Again, use yours. What I would use is the top of the candle body, right? The top of the wick and the top of the candle body to do your level of established risk. Wait for this pattern. If when it does push up, look for a drive out, look for a drive back, and remember that zone will need to hold, right? I'll just use this here. That level will need to hold here, and then you're looking for a bounce higher. Okay. Now again, does it have to be that high? No. I mean, it could be here. The important thing is that we get some space, that you can see some light underneath of it, right? So in this case, gray space. If your charts are black, it'll be black space. It's whatever color your background is. Make sure you can see some air, some space. Up, base, pull back, and then boom, look for it to punch higher. Okay. Looking for the Dow. So the Dow, you can see, has a little bit more sellers. And again, this was the same type of trap that we talked about. We were breaking through, and people knew that if it went above here, go long, right? Go long. It's a support and resistance thing. And all it did is it spiked up, it got all those people long, and then stopped them out immediately. And again, this was one of those ones that, this is the European session, and then all it did was it retraced back from the European session. So even though, obviously, the Dow is not really super influenced by what happens in London and overseas, obviously, that's when big money starts to kind of pour into the markets. And again, big push up, a retrace back is a very, very common pattern that we see. And did it turn in a good place? Yeah. I mean, there is, again, I got to change this off green, but that's where the level was. Whoops. Right there. Let me change this off. The green's easy to see, but again, I don't want you guys to think that we're going long automatically from there. So again, confirmed, and then bam, one more time in. So, very likely level for reversal today. I would say, as far as profit targets go on the downside for this one, probably back in here. I think the 38.32 is probably a decent level. Could this one have an end of day rally? Yeah, it could. And then again, after that, I would start to show a bit of caution, because the Dow, I think, will slow down a bit, waiting for what FOMC is going to do. And again, why that matters. FOMC is monetary policy. What kind of buybacks are we going to do? What type of stabilization are we going to do? What type of support for companies are we going to do? A lot in there, right? A lot in there. And again, the lending environment, but they're not raising rates anytime soon. That would be, I don't know, that would be just absolutely crazy. But again, right now, I have to say, we're at a basing level right now. Any type of shorts, make sure you guys are out before 38.32. And again, look for kind of a pop back up. Now, question is, like the other two, does the Dow have the ability to go higher? And I would say yes, it does. Again, it's got a decent level up here. I mean, you got to be looking for breaks above this 31, 287. Right now, I think the best way to play this one is really to figure out. And again, we can't do it right now because it's obviously 12:30 in the afternoon Eastern. But the best way to play this one right now is figure out where it is moved in the overnight session. Okay, look to see if we are pushing into whether a 30-minute or an hourly supplier demand area, right? An area where buyers or sellers have stepped in. And then look for a bit of a reversal, right? The Europeans take us one way, and then the US session tends to drive us the other one. At the end of the day, we're not really moving. I mean, we're in the same the same area, the same kind of back and forth sideways channel. And again, on a 4-hour, you can see we've been kind of stuck in that same channel. And even over here, we didn't really have massive movements out until we broke through. And then all we did was establish a higher channel to the top. So, it's one of those things. Look for the retracements. Look for the play. Where's the initial push, and then look for the pullback. Because again, even if this is going to go to all-time highs, impulse, correction, impulse, right? Remember, it works in two ways. And again, you can follow a lot of these: impulse, correction, all the way down. So again, great reversal at this point. There's really not much you can do. Again, it is the buyers in here that are kind of messing with it. But any type of break of this, again, 38.32 is probably a decent level to make sure you're out, right? So looking at currencies, as I mentioned, tonight is an important number. So we've been talking about the 77.74 and the 76.87, and you can see that we came down and we grabbed that level. I can bring this back up to an hourly. You guys can see we came down. We had another level sitting here, right? We mentioned that there was buyers in here, and it pulled back. So right now with this trade, we're kind of in that no man's land, right in the middle of the curve. And again, this curve is established on one of the larger time frames, kind of seeing where like the higher quality supply and demand lines are. Again, 87.07, love this level. Are we going to hit it today? No. It's a bit too far away. We're talking about 68 pips. The ATR on this position is 75. So it's an entire day worth of movement straight up to get up to that upper zone. Okay. The 77.74, I really like this. I like the fact that it puts us back in the top third over here. Again, that is the area where I'm definitely looking more bearish biased. We do have one level just a bit before it. So I know some of you guys are a little bit more aggressive. If we get up to these levels tonight before news, these could be levels where you're looking to kind of go short, right? Again, aggressively here, more conservatively up at this 77.74. And when you look to the left, you can see that we based here, we dropped down, and then buyers stepped in and said, hey, no, it can't go down. And they made an attempt to go higher, and the seller slapped them right away. Second it hit that zone, slapped them back down again. It's been unable to get back up to there. So, of the two, I like the 77.74 better. At this point, we've had so much movement up. I think we are due for a bit of a retracement and a push back down again. The problem with this one is going to be is if we do nothing but grind back down again today, that's where it's going to get a little bit difficult, to see what we're going to do with later. And again, if we get back down to the 76.97, you guys can see the level of basing here. And this is a 30-minute chart. The rally up, the base sideways, and then it exploded off that level. There are probably some buyers stepping in here that, again, if we can push down that far before the end of the day, that could be an interesting level for us to take a long off of tonight. All right. Now, a lot of times with Aussie data at night, you can see this thing pushing into a level, particularly on like the smaller time frames, that's the 5 and the 15, about a half hour before news releases come out. It's kind of like pre-positioning by big money, right? But that's going to be the best way to play it. Again, if we can push, and I'm hoping I would really like to get short the 77.74. I'm in there. Again, if we push back down, lower third, 76.97, I think is also good. Also yen looks very, very similar, and again, came right off this 79.59 or 79.60. We've been talking about it for a while. We pushed right back up into the middle, and again, this one is not as clean. We're in an area right now. You can see this old area of interest here that, it was a bottom, then it was a top, and then it was a bottom again. We're kind of stuck there, and there's a lot of wicks here. I mean, there's a little reversal right here, but you can see that we're just basing in this level, right? Above that, again, we had some sellers here, some sellers here, some sellers here. The cleanest level here is the 80.73 and the 75.60. And again, both those levels have held. We're sitting right here right now at 80.25. It's got about 50 pips up and about 40 pips down. This really needs, actually, I guess it's more than that. Yeah, about 50 pips up, 50 pips down to get into like the ideal levels. I will say right now, looking from the European session where we did nothing but skyrocket up, it is in more of a position where I'd be willing to take this short, okay, from now till the end of the day, or now at least until news. I'm hoping that this is not going to be the turning point for news tonight, but again, very strong push up, not a lot of pullback, ran into an hourly, and there's actually a 4-hour zone in here as well, although it's very small. I don't know if you guys can see it there. It's kind of one of those levels that the candles are kind of so funky it's hard to get into. You can see that actually sitting right there. There's a little bit better one of an 80.37. So there's a couple things in here, but again, I'd be looking to get short the Aussie yen. I like that much better than any type of long possibility. If it goes a little bit higher is really where my triggers are going to be. And again, could you use a couple different products with that one? Yeah, sure. There's binaries, call spreads, or knockouts available in this one as well. Now, euro yen. So last week we talked about getting short at this 26.47. I'll take it off now just to clean the chart up a little bit. You can see we got close. We missed this one by 6.3. Nothing we can do on that one. On the downside, I mentioned, and again, this is what we talked about yesterday with my group, is listen, we got a lot of things that chunk through on the bottom. We got one little group here, and again, it hit it and bounced. It hit it again, and then again, hit number 4 is what kind of punched through. Then it grabbed the next set of buyers here and then bounced them higher and kind of wiped out some of these here. So the euro yen is more or less just consolidating sideways. And I would say there's not really a great setup in this one that I love. I would say that the 26.47, again, it has not been hit. It got front run. That's probably a decent level. And that would look, basically this is your level of risk. And then, kind of the 1 to 3 is going to look something along those lines. And again, we really got to kind of focus on what this is going to, where the buyers are going to step in when it rallies back up. So, I mean, that's probably the closest. Obviously, down here, the 125.21, we got, let's see, we got about 85 pips to get down there. We got a ways. I like that area down there, but right now we got a lot to chunk through before we get there. So I think the path of least resistance on this one would be to go higher. But this 126.47 is a level that I'm going to be following all week, particularly going into Friday. If we do nothing but go sideways from now till Friday, I'm going to be kind of mad at this pair. But again, if we get anywhere close to this 126.47, going into Friday with all the GDP data that we have for France and Germany and Spain, I'm kind of liking that. I'm kind of liking that setup on both a technical and a fundamental based level. Looking at the pound yen. So the pound yen, we were looking to get long, and we had a couple levels. I'll move this over here just a little bit. So we had the level here that had been touched. We also had a level sitting just below it. It turned out that the conservative turtle won the race here. It was actually the lower level that held, not the upper one. And again, it did give us kind of a little bit of a telltale sign. You guys see this little basing level right here above the level. When it bases right before a level, tends to be kind of a telltale sign that it's not going to hold. And it didn't. It didn't hold. It went lower and ended up kind of turning and rallying back up. So right now with the pound yen, we are sitting, and again, this is back up on a 4-hour level. We're actually sitting, this is a 4-hour chart. We're sitting inside of a daily level right now. So it's very hard to kind of find where the top is going to be. Right. On a larger spectrum, though, I do like this for reversals up top, the 143.34. So again, mark that off on your chart. That's coming from daily levels. On a smaller kind of time frame on the hourly, you can see that we're just kind of trying to break through this top section here, right? Last time it turned, it literally pushed it to the brink. Again, typically a telltale sign that it's going to get broken. Again, the basing here right before the zone. Again, telltale sign it's going to break. I kind of want to see what it does now. I do like this one more to the bearish side. Although the data this morning was extremely positive, it really provided this huge rally up about 115 pips. Again, it wasn't I mean, again, your unemployment rate going up is not really good. I mean, again, the market is readjusted now. Now they need to absorb it. You know, there is no news really pretty much for the rest of the week for the pound, but there will be headlines about lockdowns, coronavirus. You know, there will be other things that could potentially be negative for the pound, just not on an economic news basis. And again, you know, you can see when this one rallies, you know, strong rallies, it tends to turn and kind of run back again. So I am bearish and looking to get, you know, bearish positions in the pound yen. Is it at the end all be all kind of shorting levels? No. So I'm really looking for a decent level top in here. And again, at 12:30 in the afternoon, this one's already been closed for a bit. The best way to play this one is see where the price is driving at the European session. Now, if you don't want to stay up in the middle of the night, what you can also do is you can look at this one at 9, 10 o'clock Eastern Standard Time and see if it is approaching levels or it's getting close to a level. And then you can potentially gauge an overnight trade based off of that as well. So it is possible to not have to wake up early and still trade this one with the UK session. But a lot of times, again, you can see here that this thing really drove right in. You know, you can see it. You can see it driving into an area down here, just which zone you ended up grabbing before taking it long. So again, the analysis is there. It just takes a little bit more finesse for those of you that don't want to kind of take those trades in the middle of the night. All right. So again, I'd be looking to get bearish this position. Now, we talked about this one earlier today, the pound dollar. Again, same type of push up, and we talked about that level up here at 37.33. As you guys can see, we came in, we survived. You know, it survived that level and pushed down, and it's just kind of basing right now. And again, this is that kind of reversal of seeing it go up. I do like the 37.56 better. I mentioned that for those of you that are a bit more aggressive, the 37.33 wasn't bad. The caveat on that is that we've had 1 touch, 2 touches, 3 touches. So if this does stabilize here, don't hold this position short. It will go higher, and it probably will grab that 37.56. But just like with the pound yen, I am looking for this one to roll over. Now, catalysts. What could drive this to roll over? Obviously, some of the U.S. news tomorrow. The question is, are they going to bring any type of dollar strength in tomorrow? Okay. The last time that we had FOMC and Powell speaking, we didn't really get much from him. You know, we were expecting a little bit more bang for our buck. It's really hard to figure out if he's going to be the mover or is Yellen going to jump in there tomorrow to get her voice heard. I do feel that because we've had such a kind of a dollar week day in this pair, I do feel that it is for reversal. I on an economic basis, I do feel that the pound is in a worse situation than the U.S. economy is right now. Question is though, we need some dollar pro news is what we're going to need. We need a little bit of help. So again, pound dollar, I like where it's approaching. I think it's moving. I think overall the pound does actually outperform the dollar. But I think as much movement as we had, as fast as we had it today, based off of missed D today on the news, I do feel like we are due for a reversal. So again, talked about it earlier, the 137.33, the 137.56, also a decent level. And again, if you can grab something in here, maybe take some lower risk. I mean, again, trading is about risk. You have to take some risk. There's no such thing as guaranteed trading. Again, if you can get minor risk here, is it worth it? Again, it depends on your individual risk analysis, but those are positions that, I'm into. And again, if you guys are wondering what this green is, like, why do I have this green area right here? This green hour is a 2-hour binary, okay? And I talked about that in the early session. If you guys haven't seen it, go watch it. It's only 15 minutes. Go to Nadex's YouTube channel and watch this morning, and I talked about why this green area and why the blue area were so important, particularly as Nadex traders, okay? And I don't even know if it's already up, Todd. I think you're still out there in GoToWebinar land. But if you're allowed to, if you could link to the Nadex video from this morning, because again, I think that's an important thing that people get. They can't make it.
I'll drop it in a second. No worries.
Cool. Thank you. I appreciate it. And guys, if you didn't watch it again, I'm explaining why these are amazing trades to take, and I feel like not enough people are taking advantage of this kind of stuff. All right. Now, euro pound. So euro pound, we were looking for a collapse. All right. Now, remember I said, listen, I want this. I don't want to pop. I want to push. Well, look what we got right here. Here's the push. Here's the base. Here's the pullback. Here is the Harry Potter, right? Here is the Harry Potter move. Okay. And I missed it by a little bit. Sorry. I missed it by a couple pips. So for this one right now, I am looking for this to roll back down, kind of the same assessment. And again, I'll just leave this over here because that was the pattern that we were looking for. I'm waiting for this one to come back down to this 88.35 level, right? I think it's again the same assessment. I think the pound is due. The euro currency obviously has some things going for it. It has a little bit more news. This level, again, it's a 30-minute level, but it's also bumping into, I believe it's a 4-hour and a daily level. It does put it back at the extreme level of the curve. And again, I'm all over when we hit the extreme level. So for me, I'm kind of waiting on this one, waiting for it to push down. It needs to go about 16 more pips. Absolutely can grind that down today. I mean, ideally, this is kind of like best case scenario here. If this kind of just grinds sideways and does one of these from now till tomorrow morning, can't go any farther. But tomorrow morning when we hit over here, like when we have the open, I like that for tomorrow. And again, kind of a retracement of everything we saw today from the pound, because again, they don't really have news tomorrow. So, that could be an interesting little trade. But again, there's that Harry Potter trade. Here, if I extend this across, you guys can see it right there. It's a level that was hit 1, 2, 3, 4. And again, 4 was the trick. And then boom, 5 is what put us through, right? It's one of those situations. A lot of people think trading is like, what do I do right now? What do I do right now? No, you need to be an if this, then that. When this breaks, when it gives us space and then pulls back, that's when you're triggered. And there it is, guys. There's your Harry Potter little lightning bolt. And I joked about it last night. I could call this the San Diego Charger, and that works on the way down, because I don't know how long it's been since their football team has been good, but you guys get it, right? Little lightning bolt, right? The Lightning McQueen, right? Maybe I'll change it and call it. My daughter's a big Lightning McQueen person. Maybe I'll call it the old ka-ching, right? She doesn't quite say Lightning McQueen good, but you guys get my point, right? 88.35 is where I'm looking for a bounce. Look for a confirmation. Look for the same type of pattern, a hit, a kind of a drive into that level, it leaves, and then look for a pullback. Could be a very interesting place for us to go long later in the week. Euro dollar. So euro dollar had a couple different areas. This did some basing here, and again, this blue is the European session. So as you can see how much movement occurred during that time frame, and just like that as well, here is the European session. Here's your 3 o'clock in the morning till basically 9. So there is your European session again. And again, everything that I talked about inside of that video that Todd's linking, there's your European session, and you had a rally of 55 pips. So 5, basically, again, most of this is early, right? 1 hour, 34. So again, you had, this one actually moved a lot more than I thought did. So what do we do with it now? I'm going to go up to an hourly. So this kind of gives you a little bit better of a view. Again, this was an area we were expecting some type of a turn. And again, we had some basing there. Right now, we're sitting inside of a 4-hour zone. So it's really kind of hard to put a top into this one. I would say, the 4-hour zone started right here at 121.53. I would say to be the most conservative we can on this one. I mean, we're really kind of running, and I don't have a curve drawn on this one, but if I was to draw a curve, I'd be looking at probably, I'll put the whole thing in there, but probably along the lines of this for this pair. And again, if I mark off that middle 33% where we're kind of in that no man's land, you can see that's kind of where we've been running for the last couple days. Ideally, I think, I mean, 122.09, and again, the aggressive entry versus the conservative, the 120.70 level, I think either of these two, and here, I'll move them over for us, here or here, I think are really the best two in my eyes, right? Again, they put us kind of the extreme ranges of where the curve would be and not really running down. But you can see every time we get into this top third, right, what does it do? It pulls back down again. And vice versa. We kind of peek our head south. We try to peek it south. And what does it do? It pulls it right back up. So it's a sideways channel. I mean, it's not a horrible. I mean, it's about a 60 pip channel. So, if we're at the top or the bottom, drop it down to a 30-minute, kind of, use the European session. You could obviously take trades off this one as well. I mean, again, this was the kind of the top of the European session. This was the bottom. So again, it is definitely a channeling position, but I think waiting is probably the best bet on this one. But again, everybody's individual risk tolerance is different. So you got play it how you guys see. All right, dollar CAD. So there's dollar CAD. This is the level. I mean, we've been talking about 127.27 since I don't know a week ago, week and a half ago. We've been talking about it for a while. It is a 4-hour base level. You guys can see it here. It is a 4-hour base level, so we're waiting to get entry into it. We actually took it, we refined it down a little bit, and that's where we ended up pulling our entry from it, from the revision at the 127.78 or the 79. Either one of those two triggered. Right now, what I would say is it's in a level where we do have buyers. So we need to be a bit cautious, right? I mean, we've had buyers step in here, and again, here is the original level. Buyer stepped in, and now it's kind of basing above. Now, this basing above, as I mentioned earlier today, this does kind of set us up for a bit more of a, again, a break through this level. What I would say is, let's see if I can get a better one on the 30. Let me give you a good one on this one if I can. Probably this right there. Let's see, we'll change this because we don't want that color. We'll change it this way so you guys can see it. Let's throw some numbers on there. All right, so it looks like a break of about 126.75. Let's see if we can get this to drive down. All right, and it does make sense. The 1 to 3 risk to reward ratio is before we hit another level in the 30. So, kind of the same thinking for what we saw in that last euro pound trade. Here's a level. Buyers have stepped in. Could it take a bounce off of this level? Absolutely. Absolutely could, right? But we're looking for an if this, then that. Basically, if we get a break below that 126.75, look for a break below a base and then a pullback, and then we can actually have it collapse down to the bottom to, 126.33 level, right? So that's kind of what we're looking for there. Again, we do have some Canadian data later in the week, particularly on Friday. This one will probably already be, finished by then. But right now, top and bottom, I'm looking for really the two trade setups I'm looking for, or another push back up to 127.80, like that for one more short, and again, take another one of these pushes down, or a break of 126.75 to take this lower. Both cases are CAD strength-based trades, and I think both of those are pretty decent. Like I said, I think the Canadian economy is in a much better place than we are. Their vaccine rollout has been much, much slower. But I do feel that they are, being a kind of an export country, I think it's good. And again, remember, the pipeline thing is a big kind of blow. Getting the pipeline canceled is an absolutely huge waste of resources for Canada. I know they are mad. They were talking about legal actions against the United States, and they still may have grounds to get those put back in on a worldly based level. So by not having it, they didn't have it before. So if they get any type of positive, or I don't know, maybe Biden's like, hey, I want to make it up to you guys because you wasted a couple $2 billion in building the pipeline that we told you we were going to use, right? If they give them something positive or some type of new trade deal that they want to do, or some type of stimulus, right? Because again, like 2,000 odd, families lost jobs and stuff like that because of it, just in Canada, just in Alberta. Again, those would all be huge perks, right, for the Canadian economy. Again, that would bring in Canadian strength, and again, 127.80 drop or 126.75 drop into this 125.67 level, which again is a 4-hour level. So ultimately, short targets, we're looking for levels down here. Okay. Now Swiss. Here's your Swiss. We talked about this setup as well. We had a level of basing, a gap, a nice test of it. And you can see we just missed the front run. And then since that time, we've gotten 2 entries and pushed lower. So at this point, the dollar Swiss is also in a level where we were kind of pushing sideways. It turned at a level which you could definitely, I mean, here, I'll just take this one here. Oops, not that one. I want this right here. You can see we had base, we had buyers step in, right? It pushed in, it tried to make an attempt at pullback, and then they stepped in, and that's exactly what we bounced off of it right there. There's the top of the body, there's the touch. Dollar Swiss is the dollar Swiss. Like I said, this is one of those ones I don't get in here and trade all this stuff back and forth. I'm really looking for it to come to extreme levels. I did like that as an extreme level. I think that was a pretty nice little place. A little bit higher is where we get into the 89 is where we get into some of the higher time frame levels. This level is, I don't know. I mean, it's been hit once. You could say twice, but even so, twice, 3 times. I don't know if 89 or 88.90 will hold again, but again, it was a great setup, very clean. I love this push off of it. I thought that was absolutely phenomenal. Right now, we're kind of in that middle range, so I don't really have as much for the dollar Swiss this week. But yeah, again, we do have the KOF economic barometer on Friday for the Swiss. So this may be something that, again, it's early in the week. Look at this one, see if we're getting any, close to any of these levels, particularly levels where you have a big push off of it. That could be a nice little news trade later in the week on Friday. Now, dollar yen, man, dollar yen has just been like, back and forth. So I knew we had a level here. I wasn't necessarily as interested in taking it. It spent a lot of time. It had been touched a few times. It ended up being the rollover point. So unfortunately, it was not an entry for me. I was really looking for, and I'll remove this off to make it a little cleaner. 104.06 is a level that, again, strong push into it, and it fought back, right? And price has not been there. Downside, I'm kind of looking for the same thing. I'm looking for prices to come a bit lower. I mean, we have that one level here, coming in at 103.40. There's a low, a lower level coming in down here as well. I mean, here's your one level here. We have another level kicking in right here at the 103.25 level. So I would say I'm bearish at heart this position. I don't have a great entry for any of the position, for any of this one though. I'm not really interested in taking it long. I just don't have much in this one. Like I said, I'm using this as my curve right now. This is what I'm kind of focusing on as far as my top and bottom. And just again, you're not going to have a trade set up in every single position. And unfortunately, that's where I'm at with the dollar yen right now. Okay. Right there. And again, we're just floating in the middle, so not really a whole lot. All right, let's go across the gold. So gold, going sideways. So yeah, this will probably move a little bit tonight when we have the Australian CPI data. Again, the 1830 was a level that we had talked about hitting. We kind of established a new low here, nice little base and pop at the 1840-ish level. It's going sideways. I mean, and really, until we see inflation, gold just doesn't have a whole lot of place to run. On a 4-hour level, you can see that, again, we had the basing. We did finally break out, but again, all we did was just kind of shift this channel up a little bit to the right. For me right now, I mean, I'm looking for this level right here. Right, I don't know if you guys can see this. Basically 89.90. I'm sorry, 1890 is a level for I'm looking for gold to eventually push. And again, I'm looking for kind of a pullback from 1890, and I'm looking for pullbacks over here. Okay, on a much lower time frame, like how do you trade this during the day? I mean, if we drop down to 30-minute levels, you can see it has chopped back and forth. For an intraday level, I mean, if you are going to trade something at night, I mean, the 1865. This had a very strong bit of movement off, just like the 1840 down here had a decent level on the downside. So, it's very hard to trade this when it just goes sideways. Obviously, stimulus will affect this. Yellen will affect this. FOMC will affect this. Unfortunately, there just hasn't been a lot of movement in gold. Again, it's just been literally back and forth chopping. So, if we can get to 1865 at European Open, probably a decent short. If we can get down to 1840, probably a decent long. Again, I think overall, I think gold will go higher at some point. We're just not there ready yet. And again, this is pretty hard to trade this. Again, strong push up, and all it did was roll back down again. And again, same level again. Strong push down, rolled right back up. So. Yeah, gold. Unfortunately, gold is not one of the big movers and shakers right now that we can play. Silver, kind of the same thing, right? Silver is here's your 30-minute silver, kind of the same channel, right? Finally, we're going to break higher, and then it just runs us back down, but we're at the same level. 2550 is a level that silver is just It is a psychological level, the 25 and the 50. It just doesn't have a whole lot of direction. So for me, silver doesn't have a whole lot of setups right now either, unfortunately. When you are looking for decent levels, I mean, even on the hourly, it's kind of like, there's just not a whole lot there. I mean, 26.58 is kind of the big area that I'm looking for it to go to. But yeah, even lower time frames, I just don't have a lot in silver. I don't want to give you guys any, false hopes and be like, oh my God, silver's great trade. So, no, there's just not a lot in silver right now, right? Again, a few retests lower, but we got so much room. I mean, if we drop, put it this way, for us to drop all the way down to 25 back down here, that's a big move in silver, right? And then again, maybe there's something worth it there if we can drop that low, but it's going to take a lot to drop to, another 50 cents lower in silver. So it's just, yeah, it's one of those things. All right, so let's pull oil up. Now, oil, so I didn't realize when I was doing all my drawings on TradingView, I wasn't logged in. So yeah, I've lost a bunch of the prior setups that we had in here and prior levels. So I had to start throwing new ones on. Today I mentioned that there was a nice little short position. Again, you saw this one kind of peaking early, right around that 6, 7 o'clock in the morning. We saw this kind of push up, and it was having a hard time breaking through that 53 area, right? And actually on a 15-minute, it's a little easier to see here where we kind of had some, again, pushed higher, and it was like, oh God, it's trying, and then bam, it failed to go any higher right here. This was a short position that I was looking for it to come back down into the 52.50 range. With oil inventory tomorrow, let me go back up to the 30-minute. I'm kind of looking, and again, curve-wise, I'm looking at 53.60 and 51.55 as being the two levels where we had really strong movement, kind of the extreme ranges, right? The extremes that we love. Right now, we're kind of stuck in the middle. The short trade is in. The short trade was in from this morning. We've pushed down. We've gone into an area of buyers where we are right now. So, could this just continue to punch a little bit higher for the rest of the day? Yeah, it could. It absolutely could. Big question is what levels we're going to use tomorrow. So the last, God, I think at this point now it's 5 weeks in a row. I think it's 5 weeks. A majority of the movement has happened for oil on inventory days, starting with the European session. So again, is this one of those ones that you could look at this late tonight and see, are we approaching one of these nicer levels to kind of take a little bit of a risk trade? Yeah, you could. Sure, absolutely. Could you wake up early and trade it? Sure, you could. Could you play the retracement at the U.S. Open around like 8:30ish probably? Yeah, you could. Or could you wait for oil inventory and then trade it? Yeah, you could do that one too. So a lot of options on this one. Really what I'm looking for, and you guys can see, pretty decent tops and bottoms on it. This 53.60 has maintained, and again, it did push a bit higher last time. So again, we may push actually up into the 53.80 range. But downwise, again, you can see that we had confirmation, confirmation, and confirmation. And again, the reaction off of this 51.55, I really like. I'm really a fan of that level as being a bounce point. But right now, I would say, for the rest of the day, it looks like we could be a bit more bullish on this one. I look for price to push back up. And then again, we'll see what the overnight provides for us. UK Open is going to probably be one direction. And then I'm pretty sure we're going to have a reversal tomorrow. We've had it the last 5 weeks in a row with movement. So that's what we got for oil. So that's it as far as analysis goes, guys. I mean, like I said, it's a big week as far as kind of new headlines. Remember, new administration, the rest of the cabinet is filling. The last I heard, it looks like stimulus is not going to be here till March, but there should be some inroads into it. And again, with FOMC speaking, now that Yellen's here, we're probably going to see some bigger headlines. As I said, I was quite surprised Yellen last week talking about how we needed to go big on the stimulus so it's not a really bad recession. It's like, whoa, did she just say that's it? We're officially going into a recession? And she was, a lot of conviction on that one. So mark your calendars for next week. I can't believe I'm saying this. February 2nd. Isn't February 2nd is Groundhog Day, right? I wonder if next week, with Pasatonic or Patuxent Phil or whatever, we'll have to do some Groundhog things next week and see if the market's going to go up or down based off the shadow. Have some fun with that one. If you have any questions, guys, you're more than welcome to reach out. Support at keeptradingsimple.com. I do try to stream every morning at 9:30 where I do live analysis as well that looks like this. Website, keeptradingsimple.com, and you can catch me on YouTube as well. Don't forget, check Nadex's website. If you guys did not, I'm pretty sure Todd linked it. But if not, go check it out. 15 minutes today, we talk about those lower duration binaries. And if you guys would like a training, Todd and I kind of talked about this a little bit. if you guys would be in for like a shorter duration binary trading, like where you could use them and stuff like that, make sure you put it in the comments. Do it on the YouTube video. I know Todd looks at those as well. It's definitely something I'd be willing to put together because I think you guys could, again, adding that in would could potentially be beneficial for everybody's trading. So, with that said, guys, I'm out of here. Have a good trading week. I'll catch you guys tomorrow morning on Nadex's YouTube page.